Hey, it's Anita, and this is the Anita Posh Show. Hello everybody, welcome to the Anita Posh Show. My guest today is one of the sharpest minds in the Bitcoin space. It's investment strategist Lyn Alden. She started investing at a young age and has a background in engineering and finance. Recently, Lyn shared the stage with the CEO and co-founder of Lightning Labs, Elizabeth Stark, at the Bitcoin 2021 conference in Miami, and their topic was called Bitcoin for Billions, Not Billionaires. I mean, I couldn't say it any better. This is exactly the core of my work in the Bitcoin space. And so I enjoyed this interview very much, and I hope you do too. Before we start, I have a message on my own behalf. I'm finally and happily releasing my new book called Learn Bitcoin with L in a bracket in July. If you want to get an update and informed about the release, please subscribe to my newsletter at anita.link/newsletter, where I also send out weekly news from the Bitcoin space. And of course, if you're bored in the next weeks, because I won't be doing any new video interviews with guests, you can listen to my back catalog of 125 Bitcoin episodes with guests from all over the world and also from developing countries, Africa, Argentina, South America. So until I'm back, I hope you enjoy this episode, and after a short break for my sponsors, on to the show. Enjoy! Many people worry about the right storage for their Bitcoin. And yes, holding them isn't always easy. The safest way is offline, physically. That's why Coinfinity developed the Card Wallet, the professional and easy solution. Order it now at cardwallet.com/Anita and get 20% off. Do you want to stay up to date with the things that happen in Bitcoin from my point of view? Then subscribe to Anita's Weekly, my newsletter with articles, videos, quotes, short tips on how to use Bitcoin and all that for free. Subscribe to Anita's Weekly at anita.link/weekly. Hello, welcome Lyn. It's great to have you on the show again. Thanks for joining me.
Happy to be back. I appreciate you inviting me.
Cool. Lyn, you were so kind to contribute to my work and review parts of my upcoming book, Learn Bitcoin, where I'm writing about how our current monetary and banking system works, how money is created, the petrodollar, and if Bitcoin is a Ponzi scheme. And these are all central topics of your work too, and a lot of my writing and my own learning is based on your work. Thanks for that.
I'm happy I could contribute in some way. I mean, there are certainly better people than me to focus on the technical stuff, but anyway, I can help with macro and things like that. I'm happy to.
Yeah, of course. I learned so much from your work, and also now it's inside the book. And yes, also thanks for your recommendation. That's really pretty cool. So, Lyn, you were recently at the stage at the Bitcoin 2021 conference in Miami. And you were talking with Elizabeth Stark about the topic of Bitcoin for billions and not the billionaires. And this is actually the topic I want to talk with you about today too. But before, I would like you to give us a short update about the macroeconomic developments in the last year, because you were a guest on my show last July in 2020, where we were talking about the reasons why you started to invest in Bitcoin, about the general macroeconomic situation, Bitcoin's network effect. And for the listeners, you can find that show on anita.link/70. Lyn, what has happened since last July?
Mainly we've had this huge kind of, basically it's almost like a control system trying to find its equilibrium. And so we had, in early 2020, we had the big disinflationary shock from, a pandemic, from shutdowns, things like that. Then we had, the largest fiscal stimulus program we've seen worldwide since World War II, right? So this huge kind of money growth and fiscal spending. And that's very different from the 2008 type of response because that was mostly a monetary response. That was basically recapitalizing banking systems, whereas this one recapitalized people and businesses. So money actually got out into the broad money supply rather than just the base money supply. And so that was a key difference. It's more inflationary and more impactful. And so we saw this huge kind of, speculative frenzy, assets going up. And then, of course, in late 2020, when they had the vaccine announcements, that started to impact, some of the more value-oriented sectors, things like, hotels or energy companies, things that have had kind of recovered more slowly, then started to get this big period of outperformance compared to some of the tech stocks that at that point were rather expensive and maybe their extreme growth rate was slowing down at that point because the stay-at-home trend was subsiding. And then as we've gone into 2021, we've kind of normalized to some extent in the sense that money supply is not growing up as quickly as it had last year. The economies are still, however, they're still somewhat reliant on fiscal spending. They're basically in a situation where even though we're seeing some of the inflationary pressures from the combination of money supply growth and supply chain limitations, central banks are still keeping their interest rates at zero for now, right? So if you're holding cash in a bank or if you're holding treasuries, you're getting uh, a yield, a coupon that is below the prevailing inflation rate. And so people are getting devalued gradually. And so we have this kind of system that, might not be as extreme as 2020, but it's still a rather rough environment for investors. And some of the obvious places to put capital are less obvious today because some of those valuations caught back up. Many things are expensive. Housing prices in many places went up. And so investors are, kind of find themselves, it's more challenging to deploy capital.
And at the same time, we have deflationary effects from the technology side, and I also think from other sides of the economy, or also the population, like in the US, is not growing anymore at that rate as it did in the last decades. Can you talk about a little bit about these deflationary effects and where they come from and what the effect will be in the coming years?
Sure. So in general, money supply growth per capita and price inflation are pretty correlated. And now there are some periods in history where there's exceptions, where you can have money supply go up quite a bit and prices don't necessarily follow at nearly the same rate. And so an example was the United States in the late 1800s, for example, because one is the unlike say England, where the land was mostly used up, the United States had they expanded into this big continent. Uh, and so that was so basically land was cheap and basically that was able to push prices down. And two, there was a host of inventions, electricity, the internal combustion engine, basically the oil age, all of that kind of was extremely deflationary in a good sense, in the form that it made goods and services cheaper in many cases. And so you had a pretty rapid period of money supply growth because banks were expanding, population was expanding, things were getting more financialized from a very, very low financial base, but all these technology kept prices low, basically tons of abundance. Another example was after World War II, when Japan kind of had their economic miracle and they kind of rebounded from that devastation, they had much higher money supply growth than price inflation because it was very, very productive growth. They organized their society extremely efficiently for several decades there, and they basically, were extremely effective. And then the third example that we're kind of still in now is ever since the kind of the mid 90s, we've been in another period where money supply growth is growing faster than general price inflation, and that's in part because we've offshored a lot of our labor to cheaper markets, and so that's kept wage inflation down, which is translated into lower prices. We also have the internet, so we've been able to digitize a lot of our goods and services. And so, for example, I don't currently own a camera. My phone is my camera, right? And I can say that for like 10 other things I might have owned, or physical calendars, or all sorts of stuff is kind of all kind of gone into my phone. And that's I generally I drive less than I used to. I don't, there's a lot of efficiencies that are given to us from not only the internet but especially the mobile internet. And so that period has been a rather disinflationary force. And then we combine that with the fact that, in many developed countries, we have aging demographics, right? So if you look at consumer spending by age range, someone who's say over 60 generally spends less than someone who's in their 30s, right? Because they've already kind of achieved certain things, and now they're not consuming and growing a family, for example. And we even see, for example, in say China, their age demographics are also kind of getting more deflationary. And so there's only kind of a handful of markets left, like places like Africa or India, where they actually have very young and rapidly growing demographics. And so a lot of these forces are very deflationary or disinflationary, meaning lower inflation, but that's countered by all of the monetary policy and fiscal policy that tries to maintain positive inflation in the face of all that. And so basically, we're kind of in the middle of a giant tug of war where you have all these disinflationary forces, but then if you raise broad money supply by 25% in one year, you're naturally going to get supply chain bottlenecks, you're going to get price increases on certain types of goods and services. And so this is something that's playing out. I think we still have years of this kind of this tug of war playing out.
Mm-hmm. You just mentioned China and Africa, and in Africa, the population is on average, I think, 22 years old or something like that, and they don't have as much consumer goods, I'd say, like we have. So I guess all the Chinese people also want to drive a car one day, and also the African people. How will this play out? I mean, I sometimes I don't understand. We don't have any growth here anymore, and I guess it's also better to not follow the path of an ongoing, everlasting growth. It's not possible. But on the other hand, we have like continents like Africa. They want to how shall I say? They want to catch up with us. So, what's your thoughts on that?
Well, I mean, there have been examples of countries that started out rather poor and then became much wealthier over time. An example would be Singapore. Another example would be South Korea. They're basically countries that have navigated that growth into becoming, a much wealthier, more comfortable society. And now we see, for example, China is currently sort of in that middle income area where, but there's a big spectrum, right? So there's people in the cities that in many cases, basically they live developed country lives, whereas in rural areas, in many cases, they're still very, very impoverished. And so China overall, they consume still a lot less oil per capita than the United States. It's like, less than 20% per capita than the United States. And India's, a fraction of that. And so there is still a pretty significant kind of growth profile in energy usage and commodity usage and just overall consumption as some of these large population centers kind of, even if they just go to the high end of emerging market consumption levels or the low end of developed market consumption, there's still kind of a pretty long runway of growth there in those regions unless something, really bearish happens and prevents them. We also see generally that as a country gets more developed, things kind of rotate out of them a little bit. So China, for example, they're not as cheap of a market to produce things as they used to be. And so in many ways, some sorts of production has shifted to places like Vietnam, for example, that are a little bit behind that curve. And also China has used Africa as essentially their emerging market. And that's, in some cases that's been beneficial to build infrastructure and things like that. It's given them some economic activity. On the other hand, there's some exploitive loan policies and other things like that are, I think, basically more in China's interest than in Africa's interest. And so it's just an ongoing trend to keep watching.
Yeah, but that's something all bigger nations are doing. I mean, that's also what's happening with the US dollar. And that's also a reason why, or I mean, not the reason, but it's a fact that El Salvador is a very poor country. And now they said that Bitcoin is going to become legal tender in the next 70 days or something, I guess. And I mean, with 24% of the GDP of El Salvador in remittances sent to the country, it's interesting and, of course, a great idea, basically, to use Bitcoin for that. What do you think will be? I mean, we didn't hear from the IMF, I think. I mean, there has been or should have been a meeting between the president of El Salvador and the IMF. I haven't heard back. Did you? What do you think? How will this play out? I mean, will the situation of El Salvador in general get better, or is it also a danger for the country?
Oh, so I believe that IMF released a statement saying that they were not really in favor of that move. But that's natural because, they're basically, they prefer the current kind of dollar-based system. I think overall it's a very positive move for the country. It's not without risks and execution risk and, basically implementation risk. But it does solve, a handful of problems. So basically, El Salvador is one of those interesting countries that doesn't have their own currency. They rely on the dollar for their currency, which is tricky because you're relying on an external provider of your currency, and that provider can, they can sanction you, so they can cut you off from your own currency. So you're basically now subservient to that country in many ways. And then two, you're subject to that country's centralized monetary policy. So basically, they're just very reliant on getting dollars from this external source, and that has all sorts of ramifications. And so, for example, if the dollar gets devalued because the United States sends checks to all of its citizens, and this other country is using the dollar, well, they didn't get the checks, but they did get the devaluation. Unless, of course, the remittances increased by a similar amount because maybe the immigrants in the United States got checks that then went back to, but we don't, I'd have to see the data. So there's a good chance that they basically get more of the downsides than the upsides from that. And so, it's also well known at this point from people like Jack Mallers that if you look at, the fees associated with the remittances, they're quite high. The ability for people to access those remittances it's challenging. They have to, go long distances on a bus, go to a physical place. And so basically it's an application of software, just like software is eaten many other types of businesses. Software is now kind of coming at the money system in a way that it hasn't really done in the past, decade or so. And so this offers a way to make that much more efficient. And if it's legal tender, it basically gives more things that El Salvador people can do with the money when they get it. So they can leave it in Bitcoin and spend it directly, or they can convert it to dollars if the banking system can easily convert between Bitcoin and dollars for them. Them or their merchants, there's basically more ways that they can just access that rather than having to go to a handful of, say, Western unions in the country and do that conversion. And so it should be impactful for the country. And then, of course, if Bitcoin were to continue its long-term appreciation, if there's more Bitcoin in the country, either the citizens hold it or they convert it to cash and then the country holds it as a reserve or something, then that would benefit the country. Now, some of the risks are, they're exposed, in some cases to the volatility of Bitcoin, but they have the option of just using Bitcoin, the monetary network, and still primarily using dollars if they prefer. And then two, if Bitcoin were to have a longer term depreciation in value and the country decide, say they're holding a significant reserves of them, or if citizens decide to store money in them, then they would of course lose purchasing power. And so there is risks of that Bitcoin itself would have to be successful likely in order for that program to be long-term successful. But overall, I think it's a really, it's certainly a good addition to what they're currently doing because it does solve some actual problems.
Exactly. And which countries do you think could be next? I've heard from Paraguay maybe, and I guess all those dollarized countries who are in deep dependence on the US dollar could try to do that.
Yeah, I think it's one of those things where this was a situation where the president was on board with it and he had a super majority in Congress on his side, and so it's you're able to get things through in that sort of environment. So you'd have to, someone who's more knowledgeable than me on the individual country politics would have to kind of know the probability of getting it past any one of them. But essentially, yes, you look at any kind of small country that's dollarized, and then especially ones that are reliant on remittances. And so all of those, it should be kind of a no-brainer to basically, at least look into Strike or these other kind of Lightning-based technologies to see how they can make remittances better, and then maybe, whether they do legal tender or just otherwise reduce frictions on people being able to convert that into dollars or basically, to get that circulating in the economy.
Exactly. I also think it doesn't have to become legal tender everywhere. I mean, the most important thing is that the people on the ground learn about Bitcoin and learn how to use Lightning, because it's actually not that difficult. I mean, you only need the right wallet, and there are a lot of it, and you can send money from everywhere to like zero fees with Lightning. And as you say, the exchange locally, that's the difficult part. But I know that even in Zimbabwe, where you wouldn't think that it's possible, there are Telegram groups, WhatsApp groups, where people like peer-to-peer exchange Bitcoin to local currency or to US dollars. So I think that if there's a will, there is a way, and the technology is here. And so what I would be interested, because you're much more an economist than I am not, so that's easy in a way. How do those countries get into a situation like that? I mean, of course, there are a lot of countries which are in these situations being exploited by China or by Russia or by the US hegemony. I always wonder, countries like Zimbabwe, I think they had a lot of natural resources, but basically it's their authoritarian regimes that exploit the country and take the people's money away. I guess that's one of the main reasons why so many countries around the world are in that bad situations. Or are there other reasons? How do you see that?
Yeah, there's a big broad spectrum of reasons why that can happen. And so it's generally, a country that doesn't have their own currency, it's often because they had a war or they had some sort of economic collapse or hyperinflation. Usually those things often kind of go together. Or they're just so small and they're so tied to the US that they just, it seems like better to use dollars. And so usually a combination of those factors. If you look at emerging markets as a whole, a general difference between emerging markets and developed economies is that developed economies are generally able to finance debt in their own currency. And so whether it's United States or Britain or Europe or Canada or Australia or Japan, when the government and companies and households issue debt, they either they take out loans or they sell bonds, it's in that country's own currency. And so whereas emerging markets, they're often reliant on external capital. And so if investors from the United States or Europe or Japan or China want to invest in a country, they generally don't want to take on that local currency, that local country's currency risk, especially because, that country might not be very diversified economically, and so it's easier for an economic collapse to happen, some sort of weird imbalance to happen and kind of damage the currency. And so they say, okay, we'll lend you money, but we're only going to do it in dollars or euros or something. And so the country ends up having these obligations in a currency that they can't print. So it's like a sound money for them, right? They owe money in something that they can't create, so dollars or euros, and yet their revenues are generally still denominated in their own currency, and they're reliant on global trade in order to keep getting the dollars or euros needed to service those debts. And so when you have a recession, then you generally have trouble paying those debts. You're likely to default on some of them. Or let's say the United States says, okay, we're gonna raise interest rates now, and so the dollar strengthens compared to other currencies. Well, if say you're Argentina and you have dollar-based debts, but your revenues are in Argentina's currency, well, and the dollar just got way stronger because the Fed tightened monetary policy. Well, now you're out of luck. It's like basically your debts just got a lot higher relative to your local currency, and so that increases default risk. And so what often happens is in these situations is whereas a developed country could just devalue their own currency essentially even mildly and just kind of, they're never really at default risk in that sense. These emerging markets are at more outright default risk, and their owning currency can hyperinflate because they just don't have the reserves to back up their external obligations.
To me, it sounds like a sort of a death spiral. I mean, as soon as you're
Exactly.
dependent and your debt is in US dollars, you have to repay the US dollars. And so, I mean, how can you ever get out of this? I mean, maybe is Bitcoin one of the solutions, the possible solutions?
Yeah, it's one of those things. It's exceptionally challenging to get out of it. There have been examples. I mean, for example, in the late 90s, there were a number of, it was the Asian financial crisis, and the epicenter really was in Thailand. And so their currency peg broke. They did not have enough reserves. And so Thailand, South Korea, Russia had problems, and then Singapore was impacted. They were able to they had the reserves though, so they were able to absorb that. But some of those countries were seriously hurt by the strengthening dollar against the fact that they didn't have reserves and they did have debts. But now, if we look at their situations, Thailand, South Korea, and Russia now all kind of learned from that lesson. They have very, very high reserves relative to the amount of say, dollar-based debts they have. And so they're in much stronger shape now. Whereas there's other countries like, say, some of the South American countries, they tend to kind of have fallen into this trap multiple times. And so it kind of comes down to there are ways where if they get external loans and they deploy that capital extremely productively, and then their economy grows substantially, then they can reduce those external loans as a percentage of GDP, strengthen their own currency, strengthen their reserves. And so there is a way out of it, but it's like a narrow path, right? There's way more ways to go wrong than there is ways to go right. And so, it's challenging to fix that because, if they're getting external loans from a source in Bitcoin, they would still potentially have a similar problem. But it really kind of comes down to, if they say held Bitcoin in their reserves and Bitcoin would appreciate, that could get them out of it in a better way. And so, the actual problem is kind of deeper than any one currency. There's no kind of magic bullet for that solution. It's really just about the inherently challenging thing of developing a country from a lower developed status to a higher developed status, and that there's inherently more ways to go wrong than right. But there are kind of certain ways that can be fixed, and I think one of them would be currency diversification. And so, for example, when they're primarily reliant on dollars, and this external source can just tighten dollars and basically strengthen them, then that's a problem for them. Whereas if you had a more multi-currency solution, or if you had kind of a neutral reserve asset, then you'd be potentially less prone to those fluctuations.
Yeah, and I think in one of your latest articles, I think you're also talking about the chances and the opportunities the people on the ground have with Bitcoin now, that we all as individuals, we can outperform the world-class investors and the banks and the big funds now only through holding the cryptographic keys. And my book is talking a lot about how to get into this self-sovereignty with Bitcoin. And you also write about the concept of self-custody. The examples you give are gold, Bitcoin, and cash. Can you maybe elaborate a little bit about the differences and what are the most interesting facts about it for the people to know who want to diversify their portfolio basically?
Yeah, sure. So basically, most people, a lot of the assets they hold are actually held by other people. And so if you have a brokerage account filled with equities, those are held on your behalf. Same thing if you hold bonds and things like that, or if you hold cash in a bank. Your cash in a bank, for example, is the bank's liability. You're basically holding IOUs with the bank. And so you have a lot of counterparty risk with most of these types of assets. And then there are some self-custodied assets like, there's real estate, but that's not portable or liquid or fungible. And then there's maybe collectibles like, trading cards or wine or art or something like that. But again, that's also not very, liquid or fungible. And so there's really only a handful of assets that it can be self-custodied, but that they're money-like in the sense that they're liquid, they're fungible, they're portable. And so you have physical cash, you have precious metals, and you have cryptocurrencies. And so physical cash, obviously the downside is if you're holding it, outside of the banking system, you're generally getting devalued even faster because you're getting, no interest rates, except for maybe Europe because you have negative interest rates in the banking system anyway. But so basically, physical cash has shortcomings in the sense that, you might want to hold a little bit for emergencies, but you don't necessarily want to hold all your cash under the mattress because you're going to get devalued over years and decades. Then there's gold, which is certainly a much bigger step up from that because if you say hold gold for decades, historically you generally maintain your purchasing power over the long run. There's been a couple times in history like 1980 or 2011 where if you bought right at the high, at the bubble high, you took a long time to kind of get your purchasing power back. But in general, for most people, if they just held gold, they generally did okay. However, gold is subject to confiscation. It's not very portable. If you, for whatever reason, you want to move somewhere, you want to leave the country, it's really hard to get your gold, through an airport, for example, unless you're bringing like just a couple coins. And so it's just not a super ideal one to hold in large quantities. Bitcoin's interesting because it's inherently more portable than gold, and it's harder to confiscate and easier to self-custody. So someone they can be mobile with it. They can go from country to country and just either have it on their phone or have it in their head, whatever the case may be, whatever their self-custody method is, multi-signature, and they can just travel around and they basically have this access to this global database, pretty much wherever they are, as long as they can get to an internet connection. And so that really kind of, adds another layer of options to people that they didn't have before. And so someone can self-custody some of their own assets in a way that is just portable and challenging to confiscate. And so, the downside there is that, so because it's a younger technology, you have more volatility, right? So you have more volatility than gold or cash in say, any given multi-week or multi-month period. And then two, unlike gold and silver, there's only a handful of precious metals. The challenge of cryptocurrencies is anyone can come and copy the code and try to compete against you. And so you're reliant on the network effect of the protocol you choose. And so that's why, so for example, in 12 years, Bitcoin has stood very well against, 10,000 competitors, but it does remain an ongoing challenge, as we saw, for example, in this cycle, when people, that got into the space that probably should have been buying Bitcoin instead end up going out and buying dog money, and it's this trap that people keep falling into, and that's just kind of inherent challenge of cryptocurrency because it is open source and copyable, and so people have to go through the lessons to kind of differentiate what makes some better than others. Why do some of them, especially Bitcoin, have a serious network effect and serious kind of sound money policies, whereas the other ones are insufficiently decentralized, insufficiently secure, or otherwise prone to devaluation.
Mm-hmm. Yeah, all the other ones have trade-offs that most people, I think, don't understand maybe because it's a difficult topic. And as you say, the other coins have marketing budget and people who tell stories about it. And what I think mostly interesting is that most of the times those project leaders, I would say, they find reasons why Bitcoin is not that great. And that's their reason why their coin is better. Yeah, but they can't prove it anyhow. Yeah, so let's get back to the self-custody thing. And because you write in your article an interesting sentence, I had to laugh a little bit. In some places today, it's illegal to own Bitcoin. Governments sometimes find them too dangerous. How could something so useless also be so dangerous? Because governments at the same time say, or also the media, Bitcoin is useless, it should be banned. But I guess you're not of that opinion because then it couldn't help the billions that we want to use Bitcoin.
No, I'm certainly in favor of it not being banned. And part of that statement is to show kind of the inconsistency of that line of thought. And so, on one hand, you have basically some Bitcoin critics saying, oh, it's not used for anything, it's not useful, it's just a speculative bubble, it's a casino asset. On the other hand, you have some of the same people saying, governments should do should ban Bitcoin or do a coordinated ban on Bitcoin. And my response to that is, well, if you think it's useless, it's bad technology, I mean, the private sector will work that out over time. It'll just lose value. People will stop being interested in it, and it won't matter. There's no reason to ban something that is just kind of going to work itself out anyway. And so you'd only consider banning something if you were afraid of it or you thought it was some sort of credible threat. And so it's just kind of funny seeing that kind of inherent contradiction, whether it's the media or whether it's certain critics. And so, I think that there are, there's certainly room for valid criticism of Bitcoin. Basically there are people that can analyze it and for whatever reason they're not bullish on it. But it's funny when you start to see basically people hold these contradictions that don't make sense really. And so it's just kind of pointing that out.
Yeah, and it even gets more funny if certain billionaires switch their opinion from one day to the other day. And I think this one guy I'm talking about, he will be back someday, soon maybe, and use Bitcoin again. What do you think? Why do most people follow those billionaires so much? As soon as Elon Musk says Bitcoin is not good, everybody sells. Why are we like that?
Well, I think a lot of people, I mean, we're in kind of an age of hero worship or influencer status where people kind of cling to certain famous people. And of course, there's different levels of fame, right? So some niches they'll have whatever their niche is. There will be certain leaders in that niche that they kind of look to. And then when you get to a kind of a bigger scale, there's people like Elon Musk that most people in the world know. A lot of people like him. He kind of in their minds represents optimism, right, about space or renewable energy and things like that. And so, when he kind of turns against it, it makes a lot of them kind of worried about it. And also, I think, it's also there's then people that are kind of focusing on the probability of, say, other corporations adopting Bitcoin, right? So as soon as he made that decision to no longer accept Bitcoin or to sell 10% of his Bitcoin or whatever the case may be, I think any investor kind of looking at the space said, well, the probability of more corporations adopting Bitcoin this year compared to what might have otherwise happened before this happened certainly went down a little bit. And so you have kind of that adjustment happening. Another thing I pointed out is that, the price action was already kind of consolidating before the whole Elon drama. And a large part of that was the fact that, in say the second half of 2020, by far the biggest buyer was Grayscale Bitcoin Trust. And so part of that was natural demand, and another part of that was that neutral arbitrage trade, where people could basically buy Grayscale, from inception, and then they could short Bitcoin elsewhere. And after 6 months, they could basically end that trade and extract that premium that Grayscale trades over net asset value. But then when you had, kind of more competition, so you had a Canadian Bitcoin ETF, you have just better user interfaces among exchanges and other ways to access it. You have places like Fidelity and other basically, just ways to access Bitcoin without going through kind of an overvalued Grayscale Bitcoin Trust. That premium went away, and so that whole neutral arbitrage trade dried up. And so basically, the biggest buyer from the second half of 2020 stopped buying in the first half of 2021. And so when the biggest buyer goes away, we started to see some consolidation of price action. So then you're kind of, you're vulnerable to what otherwise would be relatively small things like one influential billionaire saying, I'm not accepting it anymore, or I have ESG concerns. And so it was already kind of prone to the possibility of kind of near-term weakness.
Understand. And adding up to that is now the China ban, the Bitcoin ban on miners.
Yeah, it's one of those things. I mean, there's clearly disruption in the near term, right? So you have hash rate going down. We have an unknown amount of miners and hash rate moving. We still don't know the exact time frames or how rapidly this is occurring, or we don't know the final state of how thoroughly mining will leave China, if it'll be like a complete exodus or if it'll get cut in half, or we don't know the exact end game here. But we are starting to see obviously some hash rate distribution. And so that can be accompanied by potentially forced selling of coins. If you have to if you have to basically get your equipment offline, you have to transport it. Now you have extra expenses. If you're no longer in the business, you might have to liquidate. And so you kind of see some just natural disturbances happening. But I think as many people have pointed out, in the long run, that's arguably better for the Bitcoin network, because you ideally want to have no country with more than 50% hash rate. Even if because even though the nodes can push back on minor collusion, it's still better just to have hash rate be more distributed. It also removes some of the common criticisms of Bitcoin, that it's is controlled by China, or that it's powered by Chinese coal energy, or things like that. And so over time, if this distributes to North America or Iceland or Kazakhstan or El Salvador, if it kind of just distributes to more countries at a more even basis, There'll still be obviously areas that have more concentration than others, but if you can get to a place where there's no country that had nearly as much of a percentage of hash rate as China had, that should long run be better for Bitcoin.
Mm. And I mean, we can only speculate, but do you think that the reasons for the mining ban are their own inflation, maybe, or the rollout of their surveillance currency?
So I've seen a number of credible reasons why it could have been, and it could have been a multivariable decision. So one is, one of the reasons China has such a big, it's been such a big hub for Bitcoin mining is twofold. One is, they overbuilt these energy sources, so they had a lot of stranded energy, and their grid didn't fully keep up with that, right? So they built some energy production before they had the grid fully optimized to be able to kind of distribute that energy. And so there's naturally going to be big Bitcoin miners come in and exploit that. In addition, it's also a big region for electronic assembly, so it's easy to get all the parts cheaply and kind of maintenance and all that. And so the combination of relatively cheap labor, access to electronics, and then those stranded energy sources is made an ideal Bitcoin mining hub. Now, the grid is getting kind of better. It's getting more efficient over time. Some of those inefficiencies that they've been exploiting are going away, and I think China doesn't necessarily want that competing with grid energy. You also see that they are having some commodity shortages in certain areas or commodity price increases. And then three, they are rolling out their own central bank digital currency, and mining potentially represents a way to basically avoid capital controls, because mining coins is like the cleanest way to get coins, because you generate them. You don't have KYC when you earn the coins, and so those can be kind of exported more easily than say KYC coins could be. And so overall, China might have had multiple reasons to try to crack down on that a little bit. But I think in the long run it'll be their loss, right? So I think if there end up being fewer Bitcoin in China than there otherwise would have been, that's not ideal for them in the long run, and they'll lose out on some of this revenue and some of this intellectual capital and literal capital, because some of that will, those entrepreneurs and those business people and those technicians, some of them will leave the country. They will go elsewhere. They'll move their capital elsewhere, and so whatever kind of near-term reasons they might have had, I think it's it's not helpful in the long term.
But I mean, Bitcoin, due to the mining difficulty changes, will get back to an equilibrium. I mean, it's not a problem for the Bitcoin network. So it will take some time, like months, I heard, maybe even a half a year. But what's your outlook for the second half of 2021? You said before what the reasons were why the price fell in the first half of the year until Elon Musk was talking negatively about Bitcoin. What is your near-term outlook? And I can remember you said the halving cycle, you think it will be about 12 to 18 months or something. How do you think this will play out in the coming months?
So I certainly think that these factors have added some uncertainty to it. So the combination of the grayscale premium going away, so taking out the biggest buyer, and then having this hash rate distribution and this kind of more complicated, supply chain thing happening under the surface, those certainly added complicating factors to what's going on. We're also seeing that, as I point out, some of the rate of change of monetary policy this year is less extreme than last year. So money supply is still going quickly in many places, but it's growing less quickly than 2020. And so overall, I don't have a ton of near-term conviction on what Bitcoin's price will do in any, say, 3 to 6 month period. I'm still long-term bullish on the protocol, and I think we have seen some pretty violent kind of downside moves here. Sentiment's turned pretty bearish, which ironically tends to be more bullish than otherwise, right? When basically everyone's bearish, tends to be the time to kind of go long. And so overall, I'm pretty optimistic on it for this year, but not super high conviction about the price. What I'm actually kind of focusing on is the fundamentals, and so. Starting in, say, the end of 2020, I started focusing more so on the Lightning Network because I started to see that was reaching a critical mass. And so that's often been criticized for, kind of a slower development process compared to something like DeFi. But of course, the incentives are totally different. And it's kind of that thing where, you're building it slowly and correctly. So when the time's right, you have that really good foundation. And so what I've been seeing is that, you had that kind of that capacity was getting better. You're starting to get kind of higher liquidity. And so I kind of just observed that Lightning's kind of starting to catch on. And then in the 6 months since then, and now we're in mid 2021, we've had a big increase in Lightning Network capacity. We obviously have the huge news from Strike and El Salvador and places like that. And so, one of my takeaways also from the Bitcoin conference is that, Lightning was one of the kind of the highlights of the show in the sense that whether it's streaming sats from gaming or art auctions or the El Salvador news, or just seeing some of the developers talk about it and kind of the things that they're working on. I think Lightning is kind of hitting the stage now where it's kind of here for prime time, and so I think that's the fundamental network effect is still very strong.
Yeah, great. Yeah, I also, when I researched for the book, I found a long list of new services on the Lightning Network, and but I don't really have a complete chapter about the Lightning Network in my book because for me, Lightning is Bitcoin. So it's integral. It's the way to send micropayments and very fast. And so I think it's really an extension that belongs to Bitcoin. And it's also quite interesting to see, do you follow the DeFi on Bitcoin developments?
To some extent, not as close as some others, but I have been following it, and so I do think that is an important foundation to eventually have as well. And so I'm glad people are working on it. And obviously there's a couple different protocols, the different implementations, and so the more DeFi that happens on Bitcoin, the healthier I think it is. Obviously, in the past couple years, Ethereum and other chains have kind of stolen the show there. But I do think that having more of that happen on Bitcoin would be ideal because if you're doing DeFi on a blockchain that's not sufficiently decentralized in the first place, then you're kind of doing decentralization theater. Like it seems more decentralized than it really is. Whereas on Bitcoin, it's truer decentralization. And so ideally, I'd like to see as much of that happen on Bitcoin as possible.
Great. Yeah, thanks for that. My last question is more in regard of your being also you're in a way a content creator. I mean, you're writing a lot about investment strategies and Bitcoin. What is driving you? I mean, you do so many things. I see you on so many podcasts and shows. What is the main force that's driving you to work so much and to be so productive? That would be interesting.
So one is I just enjoy it. If you find something you just whatever reason it just kind of clicks with you, you're able to stick with it better. And I often use the example where when I was a kid, I tried to learn to do music a couple different times. My father would always try to get me to practice the guitar, and I just couldn't, like, it was never enjoyable. I didn't have the knack for it. I was not very good at getting better at it, and I didn't enjoy it. So I didn't really get that kind of just feedback loop to get my passion and kind of get good at it. Whereas when it comes to analyzing investments or financial markets, for whatever reason, I just enjoy it a ton. So I can do it for hours and hours and hours, and then just keep learning and learning and learning. And so that whole kind of virtuous flywheel just exists for that, whereas it doesn't exist for certain other interests. And so it's just kind of that natural luck. And then two, I would say that because we're in a very macro heavy decade, there's so many crazy things happening I just see that there's so many people out there that just they don't understand things. And if you don't understand something, you're prone to kind of, someone else is saying something sensationalist or basically giving an idea of how it's working, even if that might not be correct. If they don't have someone else explaining what's happening, they might be more prone to that. And so what I try to do is just kind of break things down as thoroughly as possible and say, here's kind of the big macro forces that are happening. Here's why some of these weird things happened. Here's where this is likely headed, but we have to monitor it. And so I just try to provide that information to people.
Mm-hmm. And how did you niche that down? I mean, how did you select those topics, and how do you focus that much that you don't go into other areas as well, and then dilute your message?
I mean, that's one of the inherent challenges is avoiding dilution. For me, I think because, I started out in engineering, I'm just inherently drawn to things that are technical. And so whenever I can combine finance and engineering, it's kind of a sweet spot. And so, so for example, Bitcoin represents that. Certain technology investments represent that. And so, kind of my sweet spots tend to be, historically it's been kind of, equities and commodities and precious metals. Those are kind of my bread and butter areas. And then I've added Bitcoin to that. Whereas there are certain other markets that I just don't follow quite as closely, such as, for example, credit markets, as an example. Like it's something I leave to other people, especially because that's an industry where the returns are generally lower, and so I view it more so just as a macro indicator, but not something I generally have detailed insights on. And so I do still choose kind of a handful of asset classes that I put most of my energy into.
Mm-hmm. And if I may ask, you have this paid newsletter service. How did you start that? Did you already have subscribers, or did you start with 0 subscriptions and said from day one, I have this paid service and you can choose it or not?
So I started that when my free platform was already pretty large, and so I started my website in late 2016, and it had just free content. I had a free newsletter, and when that got significant, and I kind of found my type of audience. Basically, I got into the rhythm of finding out what people want from me, what I'm good at delivering to them. Basically, thinking about a couple different ways to monetize it or to provide extra value. I eventually settled on this relatively low cost paid service, and I still have the same. I still have the free newsletter. I still have the public free articles, but then I have this other paid service on the side that basically provides more frequent updates than my free newsletter does. So it comes out 3 times more often, and it dives into, say, individual details for certain companies or certain things. Like I had a big section on Lightning recently, for example, that say my free newsletter might not go into, because that's only updating every 6 weeks. It's focusing on kind of big picture stuff, whereas the premium service can kind of dive down into details. And so that was kind of something that I added on after I already had that sufficient scale. So when I offered it, it was already, it rapidly was people bought into it right away because I already had a significant audience to, tap into.
Mm-hmm. Very interesting. Thank you for that, because I think a lot of people are new into the space, and also like me, I mean, I'm always looking for ways as a content creator to earn some money in a way, and how to grow your audience, and also at the same time bring your message out, like about Bitcoin. Why is it so good, or what's the good thing about it? Thank you very much, Lyn. Anything that you want to add that we forgot in the interview? Any new thoughts on current developments?
I guess probably to finish that last point and tie it into Bitcoin, I would say, when I approach my website, it's kind of like, focusing on building a foundation. And so rather than try to monetize it super quickly or get into advertising and things like that, I just was like, let me do something that I enjoy, that I'm happy to build, that I think I'm building it correctly, and then kind of to build that long-term trust. And then so, for example, when I launched my service, like I've never done paid advertising, I've never done spammy pitches, there's no pop-ups on my website. It's basically all about just usability, and so it's kind of like building that foundation and then having it ramp up from there naturally. And so one of the things that for example, drew me to Bitcoin is that, it's out of all the other, kind of protocols out there or competing blockchains, that's the one where it's really kind of about building that foundation, even slowly if need be, so that when the time comes, the foundation is solid and then it can ramp up quickly. And so I think, whether it's designing a project or being a content creator, I think that's kind of the main takeaway is, always kind of focusing on the long run and kind of focusing on building that foundation rather than trying to pull forward the gains that you could get from doing it quicker or cutting corners.
Mm. Yeah, thank you very much for that. I mean, it reminds me of this saying, find something that you love, so do what you love. But on the other hand, it has to be something you love to do, because if you want to do it in the long run, you also have to love the process, and not only have something like a hobby that you like to do,
Yeah,
And I guess,
one
yeah,
of the phrases is if you love what you do, you never work a day in your life.
exactly. And I think you found that. I congratulate you on that, because it's really a great thing to have in life.
You as well.
Yeah, thank you. I do. So, Lyn, thank you very much. It was a great interview, very interesting again, as always, and have a good day.
Yep, you as well.
Thanks so much for joining the Anita Posch Show today to learn more about Bitcoin. You can find the show notes for this conversation on anita.link/show. If you want to get the best stories in Bitcoin from my point of view in your mailbox, go to anita.link/weekly and subscribe. And if you have a question or just want to send me some feedback, drop me a line at hello@anitaposch.com. See you next week when it's time for the Anita Posch Show. Music, start with yes, delicate beats. Content, idea and production, Anita Posch.